Gold is glittering as the bloody trade and currency war rages between the world's two economic superpowers. While stock markets have taken a beating, gold surged to a 6-year high overnight as investors flee the carnage for safe havens. Our reporter Rachel Pupazzoni is in Australia's gold mining capital, Kalgoorlie, where producers are popping the corks.
The beer and the champagne has been flowing in Kalgoorlie the last 3 days as miners converge here for the annual Diggers and Dealers Conference. They've been toasting that record high gold price against the Aussie dollar. We've heard from a number of gold miners rejoicing in that fact. Also playing into their minds, of course, those ongoing trade tensions between the US and China have helped boost the mining sector. I spoke to a couple of gold miners who presented here this week.
It's really great to be an Australian gold miner today. Australian gold price at record levels. You've got this very interesting situation occurring where the Australian dollar is going down, the US dollar gold price is going up, which is unusual. Gold thrives on geopolitical and fiscal uncertainty, and you've got all of those mixed up. You've got $13 trillion of negatively yielding bonds. You know, Ray Dalio, one of the biggest, I think he runs the biggest hedge fund in the world, is starting to talk about gold as an asset class to own. So when people like that start to talk about gold, people are seeing it in a different light to what they've seen it in the last few years.
Pension funds, these big US, Canadian pension funds, if they just took, like they used to do in the old days, just 1% of gold into their portfolios, we wouldn't have enough gold. So I think there might be a bit of a structural change. Whenever there's a worry and you come back, you used to fall back to 1080 US dollars. You know, then a couple of years later, if you come off a bit, you might shrink to 1200. You know, we're at 1400 something, and it's like we're setting new floors.
My hope is that we see Australian gold producers and global gold producers stay focused on profitability and margins. That's been the evolution story. Don't worry about volume. We've grown volume, but look at quality of production.
Australia's already the second biggest gold producer in the world behind China. It might not hold that position forever if we don't get on with exploration.
So it's focus on more of the same: sustainability, exploration, extending mine lives, and not getting caught up in this, well, the gold price is higher, so you must do more things. Stay focused on quality and on margins.
As those geopolitical tensions continue to weigh on investors' minds, gold will always remain a safe haven.
I think what's driving the gold price is larger events around the world, and we probably all have a view on where that might go. So unlike metals like maybe iron ore or copper, higher prices tends to promote production of more metal, which leads to an oversupply and naturally pulls prices back down again. That dynamic, in my opinion, doesn't exist in gold. But I think the challenge for investors has been that they haven't owned any gold. The gold stocks in their investable index have rallied, and that's quite painful for their portfolio because they don't have exposure to these stocks which are going up quite rapidly. And so I think even though we think the stocks are expensive, investors are buying them because it's painful not owning them while they go up from an index perspective.
Well, that's a wrap on another successful Diggers and Dealers Conference here in Kalgoorlie. No doubt there were many golden handshakes.